Good afternoon, traders and investors. Will back here with another one. Hope everybody had a beautiful weekend. And this week, guys, we get started into, in my opinion, the most important week in the entire year in terms of the stock market. And that's very simple. It's for two specific reasons. Number one, we have Jerome Powell coming out on Wednesday with an interest rate decision. Now, the consensus is going to be that rates are going to be maintained flat. But we are going to hear his position in terms of further rate decreases over the course of the year. Keep in mind that after this Wednesday's meeting, there's only one more meeting remaining in March where Jerome Powell can potentially kick the ball down the road and not decrease interest rates. Most likely, they will be decreasing interest rates thereafter in May. So this is going to be a meeting, one of potentially the last meetings where Jerome Powell can truly hold a hawkish stance on keeping rates higher for longer. Keep in mind, we've had very good data over the past couple of weeks in terms of PCE inflation, CPI inflation, not coming in too much hotter than expected, and very good consumer results overall in terms of consumer spending and GDP numbers. So overall, the economy is good. The jobs market is still fairly good as well. And that is why that interest rates, in my opinion, will not be able to be held that high for that long over the course of the year. So this is going to be the meeting where he could potentially have a hawkish stance one last time before potentially adopting a more dovish tone in the next meeting in March. So that's reason number one. It's going to be one of the largest negative potential catalysts for interest rates, and which is going to be coming on Wednesday. But thereafter, guys, it should be getting better in the meetings going forward. And reason number two, of course, is because we have massive earnings this week here, guys. Not only do we have 5 of our major big tech companies in the names of Microsoft, Alphabet on Tuesday, and then Thursday after the close, Amazon, Apple, and Meta. All those combined representing approximately $10 trillion of market value. So it's going to be very curious to see how those perform. But as well, we have over 50% of all companies in the S&P 500 reporting this week. So it's going to be a very crucial week in terms of earnings. And not only that, since it is our Q4 earnings season and companies will be delivering guidance for the year, it's going to be very curious to see how do they see the consumer position for the course of the year? Will companies be increasing guidance? Will they be giving fairly dovish guidance? Will they be saying, will there be a lot of commentary in terms of macroeconomic risk, geopolitical risks? All those things are very important. And we're going to get to hear from some of the biggest companies in the world this year, not only big tech, but also our consumer discretionary stocks. We're going to get to hear from Starbucks. We're going to get to hear from MasterCard, another one of our credit companies. Right. So banks and credit card companies in the past couple of weeks, the ones that have reported, have said that the consumer does remain fairly resilient. So we're going to get to see a good impression from MasterCard as well. Obviously, Starbucks is going to provide some good insight into discretionary spending. And in the next few weeks, we are going to have more discretionary companies come out as well. Companies such as Walmart, Home Depot, McDonald's, right? We want to hear from them and what their guidance is going to be on full year in terms of how the consumer is standing. Is the consumer healthy or not? So this is why I say that this week is going to be one of the biggest weeks to set the tone for the entire year. So in today's video, guys, we are going to cover one company that posted earnings this morning. That is going to be SOFI stock. We're then going to do our technical analysis on all our major indexes and obviously do our major tech names as per usual. And lastly, conclude with my portfolio and see which trades we have running for the week. So without further ado, guys, let's get right into today's video. So SPY up 0.79%, QQQ up 1%, everything having a very good lift in the ending hours of our session here today after the Treasury came out and said pretty much that they were going to issue less debt towards the market, which was a bullish catalyst for bonds, meaning that interest rates did come down. So yields really had a nice little come down today, but we were expecting that here, guys, right? In terms of your yields, we were just looking for this daily uptrend to eventually coincide with a weekly lower high, right? So keep in mind this moving averages were acting as resistance. This is the 20-year right here. You see it beautifully, right? So it was a daily uptrend, yes, but we are always looking for that weekly lower high. And now with today, we have a beautiful engulfing move on a lot of your yields, right? So engulfing move to the downside, potentially setting up for furtherance of a daily downtrend. We'll see what happens on Wednesday with Fed Jerome Powell, obviously speaking, but this weekly downtrend should be continuing on most of your your longer dated yields here. So looking forward to see the progression of that. But as a whole, markets did remain fairly healthy over the course of the day. So keep in mind, this is your heat map for the day here, guys. everything looking very good. We had very, very nice broad market performance. A couple stocks were down in the morning, however, reversing most of those losses into the end of the afternoon. Big tech continues to outperform, but obviously with so many earnings this week, it is really going to be a coin toss whether or not we can maintain some of these gains. If a lot of these companies report lower than expected earnings, keep in mind that a lot of them are at all-time highs. So anything under in-line expectations or above will potentially result in a drop of their stock price. So we're going to keep a close watch on our big tech earnings for the week and how that influences the performance. On the one-day relative, you will see that everything pretty much in the green, only energy tapering back ever so slightly. And on the 1 week now, guys, we are finally back full positive on across pretty much all sectors except for real estate. So you really love to see that broad market performance coming in. So before we get into further technicals, guys, let's go over one stock for the earnings that we had today. Keep a reminder, guys, most of your earnings that we're going to be covering, we're going to do SoFi today. Tomorrow, I'm going to do obviously Microsoft, AMD, Google, and potentially even Starbucks are going to be your main ones. Then on Wednesday, we are going to do MasterCard, Qualcomm, and potentially include maybe UPS from the previous day. Those should be your major earnings. And then Thursday, of course, we have to cover our big tech ones in the names of Apple, Amazon, and Meta. Those will be your very, very large ones for that day. And then on Friday, we can do a little bit of catch up. We may be touching on AbbVie, which is one of my favorite healthcare plays at the moment, and potentially a few others that we didn't get time to do over the course of the week. CP, namely one that I do want to cover as well. One of my favorite plays in terms of value stocks. So let's get right into SoFi earnings, shall we? So SoFi, after being really beaten down here, guys, SoFi started off back in 2021 IPOing. I'm sure a lot of retail traders have had exposure to this one in the past. Now, they got started in the student loan business. And then obviously after 2021, when Biden started giving a lot of student loan forgiveness programs out there, well, that translated into a loss of money for SoFi because that was an integral part of their business. But ever since then, they've been diversifying their business. They've really got a beautiful hold on the whole trading and finance app game right now. So that's been a very big part of their business. And they have been partnering with larger firms in terms of their Galileo software that they've been purchasing. That's just an API that they've been using pretty much. They acquired that company for about $1.2 billion a couple of years back. And basically what it is, it's to revamp any person's banking app. So if you're a large bank or whatnot and you want a revamped app, an app that looks very trendy but is also very safe and secure, well, SoFi can offer you those services and basically merge your banking app into their Galileo software. One of their major clients so far is Deutsche Bank. Deutsche Bank is actually using that service from them. So we're going to take a look at that. But on the course of the day here today, what happened in their earnings, guys? Well, first quarter of positive net income for SoFi. Yes, this company has actually never brought in money before to the bottom line. This is the first profitable quarter for SoFi in their history since going public. So beat on EPS here by about 400%, but that's just because the incremental cent estimate here was about 0.004 cents, and they did come in here with a 2 cents. So very, very nice beat on earnings, positive EPS, and also beating ever so slightly on revenue. So that caused their stock to jump over 20% over the course of the day and a little bit more in the after hours. In terms of our technicals here, guys, we are still severely off our all-time highs. And this company is going to have to prove to us that it can grow into its valuation. Market cap right now is about $9 billion in terms of price to sales after having brought in about $2 billion, $2.1 billion over the course of this past year. Their price to sales on the trailing basis, guys, is about, roughly about 4.2, something like that. So fairly, not low in terms of price of sales, but not high as well. Keep in mind that since their EPS is so low, we can't really give them a price to earnings ratio. But if you take in mind their 2026 growth in terms of the end of 2026, well, that gives them a PE ratio, guys, of roughly 20. But still keep in mind that's 2 years out, and a lot of things can happen within those 2 years. So I usually don't like using a PE ratio so far out, but just to say that they are growing the top and bottom lines of their business, and they are expanding in terms of clients. For me personally, guys, SoFi, I don't really touch this stock personally per se, just because they have been losing money for a long time and we have been looking for that profitability story. But now that they have actually turned profitable, it may be worth a deeper dive even for somebody like myself. In terms of the technicals, everything is pretty much looking fairly flat at the moment, right? We're very much in this tightening weekly range and also a very, very tight monthly range. The bull bulls are trying to set the monthly higher low, trying to go for the monthly uptrend, and that would be a break of your 1165 level right here. In terms of buying opportunities for me personally, after this most recent quarter and fairly decent guidance that the company gave, I would be attracted to potentially write some puts in this company at this point below $8. That seems to be a nice spot to swing trade for me. But in terms of long-term prospects for the company, guys, this is really a hit or miss. It's a company that I would maybe delegate maybe about 0.5% or 1% of my portfolio to, just to kind of go for the growth story. But keep in mind, nothing is guaranteed. Company is still in its very early stages. So let's keep an eye on the headlines here. SoFi surges most since July after posting first ever profit. CEO says 2024 will be a transition year for the company, and the firm expects full year profit as much as $105 million in profit. So let's take a look at some of their headlines here. Very, very good headlines. Accelerating revenue growth, expanding margins, and GAAP profitability are the names of the game here. Fourth quarter, $615 million in revenue, up 35% year over year. That's very, very, very good. Record fourth core adjusted earnings before interest, taxes, depreciation, and amortization of $181 million, which is up 159% year over year. Very, very good. 30% target margin reach, which is very good. Like to see them expanding in their margins. Right. Quarterly new member adds of nearly 585,000. Very, very good member growth as well. Total members up 44% year over year to over 7.5 million members. Very good. Quarterly new product adds of nearly 695,000 products. Total products up 41% year over year to over 11.1 million products. So keep in mind, they have a bunch of lending products, but not only that, they offer consumers the capacity to invest in stocks and ETFs. So a lot of this product growth is just them adding to their stock and ETF potential that consumers can purchase through their apps as they are running a number of things at the same time. They're running obviously checking and savings account. They're running loans as well that they can do to consumers, and also they have a slight take in the brokerage industry where they allow clients to deposit money and purchase stocks and ETFs with that. So a lot of these products are just going to be coming from these stock and ETF offerings. Fourth quarter, this is the kicker for me. Fourth quarter total deposit growth of $2.9 billion to $18.6 billion. So they've done a great job attracting new clients, potentially with high savings rates. A lot of the banks have been doing that, offering clients, anywhere between 4.5% to 5% in terms of if you leave cash in your checking or savings account, they will pay you 4.5% to about 5% on that balance. That's very easy for them to do because they can just deposit money with the Fed at 5.25%, and then pretty much give you less than that. So they pocket the difference, also known as your net interest income. The banks do the same thing. That's what we were talking about going over the bank's earnings. That's how they drive up their net interest income. And now fourth quarter growth in tangible book value of $204 million, up $334 million for full year 2023. So they're solidifying their balance sheet. Very, very good headlines overall. Everything positive, especially their new member adds, and their deposit growth is going to be the two that I'm looking at. So let's take a look at some of their slides here, guys, that I thought that should be fairly interesting to present to you. So in terms of your new members, you see that their new members are ever expanding. No real slowdown, no stagnation at all. Really doing a great job of pulling in more members on a year-over-year basis. This is your 7.5 million member mark, and you can see that that's up pretty much on a 44% year-over-year growth basis. So very, very good growth metrics in terms of their members. In terms of their products, they continue to offer more and more products. They should be peaking out relatively soon. I mean, the company is really growing into its product suite currently, but there's only so many products that you can offer on the market at any given time. So I am expecting a slight slowdown on the ramp of products as they really reach maximum exposure to most financial products in the market, but still year-over-year growth of about 41%. That's very good. Galileo accounts. So this Galileo segment was what I was describing a bit in the introduction of the company. This is just basically their software, their API that they can partner with other different institutions to basically offer them a revamp of other institutions' apps. So let's say, I'll take an example. Let's say TD wants to completely revamp their app because they want better user interface. They want better customer security as well in terms of payment solutions and investing solutions. Well, SoFi will work with you and build that app for you. And they do that through their subsidiary called Galileo, which they acquired a couple of years ago. So you can see that the total accounts that are under the Galileo suite that is using this software is up to about 145 million clients. So that's been very, very good growth here. Obviously it's stagnating a little bit. So I want to see them go and get more large clients. As of now, their largest client in terms of a bank is Deutsche Bank, which is a fairly large bank per se, but I'd like to see them get more and more of these large institutions under their books, and that should really help them lift this total account balance. And when we go through the balance sheet here, guys, you'll see that despite the amount of accounts that are running under this software, the amount of money that it brings to their bottom line is actually not that much. So you'll see also some nice growth in their lending products, 24% year over year. In terms of their financial services products, as I was saying, stocks and ETFs, those are obviously up the most, as it represents a larger amount of things that you can give to people. There's only so many different lending products that you can offer to consumers. But then again, in the stock market, there's over 15, 20,000 stocks for people to choose from. So there's obviously a lot more things down here. So let's take a look, guys, at their quarterly adjusted net revenue. You can see this is the little bump here, 34% year over year growth. So I need to see this come up a little bit more. Keep in mind, SoFi has been unprofitable for so long at this point, right? That we're just going to keep an eye on their debt and cash equivalents. So far, so good. I didn't see anything bad in terms of the actual balance sheet. We're going to go over that in a little bit here. EPS expansion, you can see EPS expansion doesn't give me more than 2026, but they should be bringing in 44 cents. And if you take in consideration their current share price, which is roughly like $9.15, right? $9.15. Divided by their 0.44 gives them a PE ratio of about 20.79, but that's end of 2026 earnings, right? Revenue should still be expanding as well. You can see a beautiful expanding revenue curve here, roughly, so-called about 10, 12% per year over the next couple of years. So that's not too bad at all. Just need to see this start really ramping up a bit more in terms of that. If we take a look here further down on the balance sheet, this is what I wanted to show you guys. One of the last slides that we are going to go over here, right? So fiscal year 2024 guidance, decent, but coming in underwhelming in my opinion. So tech platform and financial services growth of 50% more versus 2023 levels. That's good. Lending segment down, right? 92 to 95%. It's a fancy way of saying it. Rather than saying decline, they'd rather show a high 90% retention rate level of revenue levels. So this is going to be a slight downgrade in terms of their guidance for the lending segment. GAAP net income projecting another $100 million. Very, very decent. EPS of 7 to 8 cents, which is roughly double of what they just posted here right now. And then obviously they want to be growing their book value too. So guidance, not the best, not the greatest. They did say that it's going to be a transition year from them. So we're curious to see if they can just maintain that profitability while growing their customer base. So here's going to be the segmented financials right here. And what I did want to show you guys is the technology platform segment. So this technology platform segment, maybe you can't see it because it's a bit too small. We're gonna zoom in on it real quick. So technology, so you'll see that their total revenue coming in from their lending segment, which is one of their largest segments here, is about $1.3 billion. And in terms of your technology platform segment, this is inclusive of your Galileo software, is only about 352 million. So they do have the 145 million user accounts here, but in terms of total amount of revenue that it generates, only about $352 million. Now that is a substantial amount, of course, but in terms of their total revenue, which is about $2 billion, right? It only represents, you just got to do 3 divided by roughly 21, right? So it only represents about 14% of their current revenue. So not a lot. Need to see them grow this business segment a bit more. So all in all, guys, I was fairly happy with what I'm seeing in SoFi per se, just not enough for me to go all in extremely heavy on the stock. Like I said, I wouldn't mind getting some exposure because the company is moving in the right direction, but it obviously does have headwinds. It does have stiff competition from other fintech providers. So I'll be doing a bit more of a deep dive, may have to revisit this one in the next few weeks and do a bit more of a deep dive on their financials. But all in all, earnings were good, moving in the right direction. Just in terms of the share price right now, I still don't think, guys, that the company deserves to be trading much above, $11 mark. So there is a little bit of a trade there. But after $11, considering 2024, they're not going to be expanding revenue that much, not going to be expanding net income that much, more of a transition year. It'd be very hard for me to see a substantial rise in the stock price unless they really get a huge bump from rates potentially coming down over the course of the year. And that obviously won't be because the company is doing anything specific. It'll literally just be a carry trade off the back of lowering rates. So that's my impressions on SoFi. Now, Let's get right into our major indexes here. So SPY on the day, 0.79% to the upside. The daily trend just simply continues at this point. So daily uptrend, still no pullback. Keep in mind, SPY never lost the hourly uptrend. Never lost the hourly uptrend to a downtrend, unlike QQQ, which we'll see that did. So SPY never lost the hourly uptrend, which means your daily move higher continues. Bulls creating a lot of space now, right? At this point, any move lower at this point, anything above 470, just going to be looking for a higher low for further trend continuation, and now sitting well above your all-time highs. All-time highs is this yellow line right here. So now sitting a comfortable 2.5% roughly off your all-time highs. It could now act as a bit of support. So now your region that I'm truly going to be looking at here, guys, is between these two yellow lines right here. The all-time high area, we're talking 480 all the way down to about 470, should be a very solid area of resistance. Keep in mind, if earnings fall apart and Jerome Powell really hits us with some hawkish news and we go for a potential daily downtrend over the course of the week, well, that's fine. Just going to be looking for a weekly higher low at this point, anything above 466.83. Very healthy space for a weekly higher low. Keep an eye on this area, 480 down to 470. Your 12 EMA is right down there as well, should be acting as decent support. Now moving on to QQQ. QQQ, contrary to SPY, lost the hourly uptrend into an hourly downtrend over the course of last week. That was Q for daily consolidation. And now having regained your hourly trend change over the course of the day, well, your daily higher low is set with the close of Friday pretty much. So daily uptrend simply continues at this point. Daily higher low is now set for 23.17, but so many big tech earnings this week. If ever we don't make a new high and roll over to a lower low, that would be a daily downtrend, and that would mean you are in for weekly consolidation. But bulls, tons of space, anything above 395 just for very, very healthy weekly consolidation at this point. Weekly uptrend is extremely healthy, right? And your previous all-time highs at this point, guys, is going to be this green box right here. So this is really the area that we're looking for the bulls to put a stop to the bleeding if ever we come down. This is really your zone of weekly support right here. We're talking pretty much 405 all the way down to 385. I know that's a wide range, but pretty much 405 down to 400 should be a very sweet spot for the bulls to step in for some long-term buying. If ever we do lose that, keep in mind from here down to there, guys, that's about 5%. So a fairly wide margin now, pretty much above your all-time highs to just pretty much come down and sit on them if ever we do get bad news. So bulls still looking healthy. XLF financials looking very, 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 very good. So after losing the daily uptrend, daily downtrend right here, engulfing move by the bulls, still no loss of the hourly time frame, which means your daily move higher, this is all one move, simply continues. As soon as this move tops out, we're just looking out for a daily higher low at that point. Anything above 37, just looking for a daily higher low. And keep an eye, guys, this is going to be your area of support. $38 pretty much all the way down to $37.50 should be acting as very decent support if ever the bulls do choose to taper back a little bit. Should be acting as a very nice area of support. Previous horizontal support, moving averages as well. And on the weekly, guys, everything is looking beautiful. We are now under leg 2 here of the weekly price expansion. Beautiful weekly uptrend. Upside targets currently sitting at about $40 is going to be your next one, and then all the way to the all-time highs, roughly around 42. But definitely this 40 area could be acting as a decent area of resistance. It's acted, you know, $39 to $40 has been resistance a lot in the past. So we'll see, can we get up there before putting in some potential weekly consolidation? I really do think so. Financials looking very good. No red flags from the credit card companies, no red flags from your large banks, and no red flags from the small banks either. Everything looking good. Now moving on to healthcare. Healthcare, very good recovery by healthcare, guys. Love to see it. So daily downtrend had by the bears for only a day in which they set the lower low. And now we have an engulfing move by your bulls. So this is exactly what we were talking about last week. Once you get your daily bounce underway, how do you know it's underway? Well, we recapture the hourly uptrend into today, and now you get your daily bounce. So your daily bounce is almost engulfing your previous leg down. That's exactly what you want to see. It gives the bulls the amount of space needed to either V-shape this back to your previous highs or put in the two-step daily higher low for daily trend change back to the bulls. This whole area of consolidation was just looking for a weekly consolidation. That's what we were saying the whole time healthcare was consolidating, just looking for a weekly higher low. We were targeting this area, but it never really got there. 137 down to about 133, never really got there. Almost did, kind of tapped the whole range, and now moving on here Looks like it does want to move on for weekly number 2 of this weekly uptrend expansion right here. Everything looking very good, almost at all-time highs, guys, right? 143 is going to be your all-time high area of resistance. So just keep in mind that for healthcare, but everything looking very good. If tech falls off a cliff this week because of some bad earnings, let's say, I need to see financials and healthcare hold up the weight of the market when that happens. And now lastly, IWM Russell. IWM Russell started off the day, very good. And then after the Treasury news came in, absolutely exploded. As I was saying, that yields really came down at the end of the day, and Russell being so sensitive, 2-year yields really benefited from it the most. So 1.75% to the upside. Daily uptrend now set back to the bulls. So after a daily downtrend, we were looking for the size of the bounce, put in a 100% engulfing move. And on Friday's video, I was saying with such tight price action above your moving averages, this looks like a daily bull flag for potential daily trend reversal to the bulls, and they got it today. So daily uptrend is set at this point. Hourly timeframes have been now recaptured by your bulls. Hourly trend change in motion. So daily consolidation is finished at this point. Love to see the daily trend expansion at this point. And you know that after daily downtrend, meaning weekly consolidation, when we get the new daily uptrend, that means your weekly higher low is set right down here at 187.79. We're going to be looking for leg number 2 of this weekly expansion move to the upside. Upside targets have to be 205.56, and then we're looking all the way up to about 211 for this target right here. Need to see the bulls severely clear 201 to about 195. Need to get through this previous resistance area and close hard above it. That would be very good. I think it's all going to rely on Jerome Powell. If Jerome Powell is fairly hawkish on rates, you may get a little bit of a pullback on the Russell, and we may just continue in a tightening up pattern. But if Jerome Powell is for some reason bullish on rates on Wednesday, that's when you really may see the Russell start eclipsing some of these highs, but looking good. Bulls recapturing your lower time frames and never lost the control of your higher time frames. So everything looking fairly good for the Russell. Now, guys, let's move down to crypto a little bit because we didn't cover it in a little bit. So Bitcoin now, after a daily downtrend, recapturing to the bulls. So recapturing, engulfing. This is 1, 2, 3 legs down. So you measure the size of the move in relation to this third leg down, 100% engulfing move, still no pullback. So when this move tops out, we're going to be looking for a daily higher low. Anything above 38,442 should be looking for a daily higher low for trend reversal to the bulls. And on the weekly, it's not looking bad either, right? So weekly, we had lost the weekly uptrend right here after we cut these lows with pretty much last week's candle. But now the bulls are looking to potentially set up the size of the bounce, which is going to be key if we get a very weak bounce, right? So keep in mind, from top to bottom, we've currently only bounced roughly about 40%, I would say 42% maybe. If you want to see the bulls have the chance at recapturing this weekly uptrend, need to see them bounce as high as 45,000. That's going to be the key mark to regain your weekly time frame. If not, since the weekly was low, we're just looking for a weekly lower high for potential retest of these lows right here as we continue into consolidation. And we are still in pretty much monthly consolidation phase. This month ends in pretty much 2 days, so we'll see how the candle closes, but does lead to the impression that we may have a little bit of a pullback here over the next couple of weeks as Bitcoin further consolidates in anticipation of your halving event. So that is my basically technical analysis on Bitcoin. I'd be very surprised, guys, if we just start rocketing back in this 52 area. Obviously, anything is possible, but so far the technicals do lead me to believe that the lower high is coming. And then we'll see, can the bulls protect this low, or are we just going to go lower and just consolidate a bit more in this beautiful, healthy monthly uptrend, just looking for a monthly higher low for further trend continuation. My averages will come in only if we break 38,000, 38 to about 35,000 is where I want to be buying more Bitcoin. Now, lastly, Ethereum. Ethereum not looking as strong as Bitcoin, right? So Ethereum really put the daily downtrend into a big time motion right here, testing your previous lows around 2,200. So now, they need a fairly big move to the upside to really start engulfing this move. We're talking pretty much need to get as high as 2,500 to really put in an engulfing move against that. So what we need to see, guys, in terms of the bulls' capacity to set up a new daily uptrend, need to see them bounce as high as about 23.75. If we can get up to 23.75, it sets the bulls up nicely to potentially recapture this daily uptrend right here. And that would mean that your weekly higher low is set. We're just going to be looking for potential weekly trend expansion, as opposed to Bitcoin. that lost the weekly lows. Ethereum never actually lost the weekly lows, right down here around 2200 all the way down to about 2150. So still holding this weekly uptrend. Can Ethereum just start powering through and really taking over from Bitcoin's dominance and really start moving faster than Bitcoin? If Bitcoin continues to fall, wouldn't it be nice to see if Ethereum could just maintain a tightening range or just slightly rise? That would mean that Ethereum would be heavily outperforming Bitcoin. But everything not looking as bad on Ethereum as it was on Bitcoin. Ethereum just really consolidating. And even if we do get a weekly downtrend, let's say, guys, my sweet spot is 2100 down to 1900 for further purchases. Just looking for the monthly higher low for further trend continuation down 2024. Second half of the year, in my opinion, guys, is going to be the best for crypto when rates have come down and when the risk on trade becomes more prevalent. Now, let's get into our major tech names. So, Apple pulling back a little bit on the day, but got some lift into the late afternoon. Obviously, price action is going to be fairly limited here, guys, because we do have earnings on Thursday. So just keep that in mind. Daily uptrend is in motion by the bulls at this point. Just looking for the daily higher low, and we were targeting this area right here. It bounced from there today, 190 down to 187, your previous area of support as well. And it did act as a reaction zone here in the past in August too. So Apple looking good, creating a lot of space for the bulls to set the daily higher low. In terms of the pullback, we've only pulled back roughly 38.2% of the move. So if the bulls do start uptrending from here, right, could set us up for a nice change back to the bulls in terms of the daily uptrend. Weekly trend continuation as well would be the case for Apple, but everything relies on earnings. Earnings are bad. Keep in mind, Apple has been plagued with a slew of bad news. They have their Apple Watch lawsuit that's currently ongoing. They have iPhone sales that are not supposed to be the greatest and that have been falling behind in terms of most recent years' sales volumes. And also Apple's revenue for this year, they said that it would largely be flat in comparison to last year. So if guidance and earnings are a disappointment for Apple, I would not be surprised if we can potentially revisit the lower 180 areas, which would really undo all of this massive work done by the bulls. So we'll take care of that when we get there. Just know that if we do get back to the 180s, I am still expecting this tightening range to play out as we just develop the tightening range on the monthly as well. Lower 180s is a buy target for me on Apple. So if ever we get down there after earnings, I will be picking up some shares of Apple in the form of writing puts against them. And obviously, if earnings are very good and they up the guidance for the year, well, daily uptrend just simply continues at this point. And then we're just looking for the weekly trend back to the bulls. A break above 200 would pretty much do that. So keep in mind earnings for Apple. Now, moving on to AMD. AMD as well, earnings tomorrow after the close, okay? So AMD price action is going to be fairly limited until then, but the bulls do have a very healthy daily uptrend going right now. They set the daily higher low today, right? Trying to recapture this hourly trend change, but not fully doing it yet. So daily consolidation is still underway on AMD. Anything above 164.21, right? This most recent higher low right here is going to be looking for a new daily higher low for further trend continuation. But AMD is expected probably to move about 6-7% after their earnings tomorrow, up or down. So if it is in case of the downside in relation to today's close, let's say they do put in 6-7% to the downside, right? That would be challenging our previous daily higher lows. It would most likely start a trend, potentially daily downtrend of consolidation. And at that point, guys, just would be very healthy weekly consolidation, beautiful weekly uptrend right now. Any move lower, looking for a higher low above 134.16. So tons of space. And keep an eye on your previous area of support, 164 down to 160. It is your previous area of all-time highs. So I do expect the bulls to use that in terms of a retracement zone. That zone is currently about 7 to roughly 10% away. So it's more than the expected move currently on AMD. We'll see what they have for earnings tomorrow. And obviously to the upside, guys, no price targets because we're at the all-time high. Psychological level of 200 is going to be the name of the game. And the focus on earnings tomorrow for AMD is really going to be the new product line that's competing with NVIDIA. Investors are going to be wanting to hear all about their cloud data warehousing services that they're in competition for NVIDIA for. Have they been able to attract large clients in the form of some of your big tech names, Microsoft, Google, Amazon, Oracle, and the likes? or that is going to be the gist of the earnings call for pretty much tomorrow, because their GPU segment has been performing relatively well. Consumers seem to be really liking the new suite of GPUs that they released just about a month ago. So everything's going to be going good in terms of that aspect. But this whole rally, guys, has been predicated on the fact that about a month and a half ago, they released their competitive suite of chips that is going to be used in competition for NVIDIA for their cloud data warehousing services. So just keep that in mind for AMD earnings tomorrow. Now moving on to Amazon. Amazon moving healthily on the day. 161.26 upside targets. As I'll remind you guys, as we continue our daily uptrend, upside targets on Amazon do remain 165 up to 170. Amazon earnings on Thursday as well, so price action would be fairly limited until Thursday. However, we are in a beautiful daily uptrend currently, right? So as of now, daily uptrend still persists. Any pullback at this point, just looking for a daily higher low, anything above 150, going to be a daily higher low. And this is really the big area of support, guys, for Amazon, right? 148 all the way down to pretty much 140. So until we hit the top end of that move, the expected move for earnings is 150, this red line. And there's now so much space for the bulls here, guys, right? Before the higher low is challenged, we're talking about 7%. The expected move on Amazon for the week is about 5.5%. So now we're even more, we've created even more space below until that $150 mark, which is our previous daily higher low right here for the maintenance of the daily uptrend, right? So we'll see what happens with Amazon. Targets to the downside should remain 150 down to 148 is going to be the first line of defense. Going to be very tough for the bears to break that, in my opinion. And targets to the upside for earnings, I would keep an eye at 165 to 170, which does represent potential upside here, guys, of about 5.5%. Amazon, obviously, weekly bulls, full control at this point too. So any extended pullback here, guys, if we get a bad earnings, get a really extended pullback right here into a daily downtrend, let's say, well, weekly, just looking for a weekly higher low, anything above 145. So much space to set the higher low and move. But I do think Amazon should be delivering fairly good earnings. It is all going to be on cost efficiency for Amazon. So profit margin guidance forecast for the year, since they've recaptured profitability after having struggled with it in the past 2 years. And number 2 is going to be the AWS growth rate. That will also be front and center for Microsoft. It's all going to be about the cloud growth rates for Amazon. Now moving on to Google. Google with a healthy day here today, 0.68% to the upside, and daily uptrend simply continues on Google as well. So bulls, full control, never lost control, daily uptrend rate. Any pullback at this point going to be for a daily higher low. Anything above 140.5 is going to be looking for a daily higher low. The expected move on Google is also about a 5.5% move, right? So the expected move as of Friday's close was about 146.43. So before we lose this daily higher low, guys, Google can now pull back, about 9%, which is twice the expected move for earnings. So we'll see what's going to happen for earnings. Obviously, Google with earnings pretty much tomorrow after the close. So limited price action until there. Upside targets for Google, well, very tough because now we're past the all-time high. So the next psychological level of price target would be about the 175, and then we're off to about 200. But at this point, guys, really no resistance to the upside, really just massive support down here, right? If for ever which reason earnings are a complete disaster, which I would highly be surprised from, but let's say they are, well, Google has tons of space to pull back. Weekly uptrend here, guys, anything pretty much above 136.75, just looking for a weekly higher low for further trend continuation. Everything is looking beautiful. They control the daily, full control of the weekly leading up into earnings, full control of your monthly time frame as well. But similar to other big tech stocks, right? Just still slightly overbought. So if all these earnings are super positive here, guys, Apple, the only one that's not overbought, but look, AMD overbought, right? Amazon getting a bit overbought, Google bit overbought, and the list continues as we've been showing in the past 2 videos. So if all these earnings are amazing for big tech, it is going to result in most likely a blow off top. All of these daily RSIs will get very, very, very overbought. And then we'll be probably looking for daily consolidation on a lot of these things, which would probably be daily and weekly consolidation for QQQ as well. So just keep that in mind. If we get fantastic earnings, that may be the time to potentially take some profits and wait for a little bit of cool off of these short-term timeframes. Now moving on to Meta. Meta also, look at this daily oversold notice, right? Meta as well with earnings on Thursday here. Daily uptrend, absolutely gorgeous on Meta at this point. Any pullback, anything above, 359-ish, let's call it, just going to be for a daily higher low. Before losing the daily higher low, guys, we have so much space. We have 10.5% before losing that daily higher low. So daily bulls in full control of everything right now, right? On the weekly as well, same thing. Weekly uptrend is absolutely beautiful. Meta finally getting above that $400 psychological level of resistance. That's pretty much new all-time highs for Meta as well. You can see this beautiful monthly uptrend. Meta, front and center of earnings is obviously going to be margins, and continued cost efficiency by Mark Zuckerberg. If you can get that done, this stock still does have a little bit of room to move, in my opinion. Everything looking very good. And if for whatever reason earnings are bad, we lose and we get into a daily downtrend thereafter, we'll look on the weekly, how much space we have on the weekly, guys. Anything above 341, just looking for a weekly lower high. We can literally lose, before losing that weekly lower high, we need to go down 15%. It's a very, very big ask. Now, weekly is overbought on Meta, daily is overbought, yes, but until we get a larger foreign market pullback or some bad news out of Meta specifically, Meta still very, very bullish. It's up to the bears to take control at this point. Now moving on to Microsoft. Microsoft looking fairly decent as well, right? So Microsoft, beautiful daily uptrend this entire time after breaking out of your area of consolidation that we were stuck in. Beautiful daily uptrend at this point. So now any pullback is going to be looking for a daily higher low, anything above 385, pretty much just looking for a daily higher low. Before losing this daily higher low, Microsoft, tons of space, guys, like 6% before losing the daily higher low, everything good. Microsoft all-time highs currently, right? So no areas of resistance in sight. You have to go with psychological numbers at that point. So 450 should be the next one, psychological level for Microsoft in terms of that. But daily bulls, full control, not much else to say. Weekly bulls, absolute full control after the breakout as well. Getting overbought on the weekly, still overbought on the daily time frame as well. So keep an eye on Microsoft, guys. If Microsoft tomorrow after the close has extremely good earnings, once again, this may be just a case of your gap up into a blow off top opportunity. Going to be very overbought on the weekly, going to be very overbought on the daily at that point. So it would most likely translate into an opportunity for most investors or retail traders to potentially take some profits and wait for the stock to consolidate a little bit. But as of now, bulls in full control, guys. Netflix just continues its move up after earnings now. Since earnings, pretty much the day before earnings, right now up 17%. Very beautiful move on Netflix. So technical analysis on Netflix, very simple here, guys, right? Daily uptrend set in motion right now. Netflix severely overbought as well. So we'll see what happens with the rest of big tech and Jerome Powell. Will they be able to come down a little bit after this extremely bullish move? Or will they just potentially consolidate sideways? That's always an option, right? We don't necessarily have to give a lot back to cool these off. Just have to maybe consolidate sideways, just like Microsoft did for a very long time back here in December, where you saw they were coming into overbought conditions and then cooled them right off by consolidating sideways for a better part of the month. So we'll see what happens with Netflix as well. But one thing's for sure, bulls in full control. Any pullback when this move is topped out, anything above 476.50, looking for a daily higher low on the weekly. Weekly looking very good as well. Weekly uptrend is largely confirmed at this point. And now we're moving past the top end of this area of resistance. This was previous resistance back in 2020 and 2021 for the better part of an entire year. And now we're slightly breaking and closing above that level. So curious to see if Netflix can maintain the closures above your 575 level. That would be key area for a monthly closure of the month of January. So looking very, very healthy on Netflix. No red flags at all, other than your short-term timeframes are ever so slightly overbought. But as long as we don't lose this hourly uptrend, this daily move simply continues. Now moving on to NVIDIA. NVIDIA as well. NVIDIA up, almost 2.5% on the day here today, right? So NVIDIA consolidating ever so slightly on Friday, but really NVIDIA never losing the hourly time frames, right? So losing them for a better part, almost not even half a day at that point, and then bulls just recapturing it right away. So daily higher low is still not set. In my opinion, this is still only one gigantic move for NVIDIA. As soon as this move tops out, we'll need a loss of the hourly time frame into 2 days of consolidation. Then you will know daily consolidation is underway. Anything above 475, just looking for a daily higher low. And NVIDIA with so much space here, guys. Before losing this daily higher low, look how much space, guys. It's really like 25% at this point, right? So bulls with tons of space. Overbought on the daily, of course. It's NVIDIA. It always does that at this point. Weekly is overbought as well. So we'll see over the course of the week, guys. NVIDIA really going to be looking at AMD earnings and the rest of big tech. It will follow the rest of big tech. If all of big tech is red, NVIDIA will not keep climbing on its own. It will get caught up in that carry trade as well. And if QQQ drops, well, NVIDIA will most likely start its daily consolidation as well. But tons of space for your daily bulls and even tons of space for your weekly bulls as well. So I'm just looking for pullbacks on most of your big tech. That's why I'm accruing a lot of buying power in the account. Just looking for our consolidation before furtherance of weekly and monthly uptrends to the upside. I do think that when this dip opportunity comes, it may be one of the last dip opportunities in 2024 for a lot of your big tech stocks. Now moving on to Tesla. Tesla finally a beautiful day of recovery here, 4.2%, 420 almost, right? 4.19. So beautiful recapture here of Tesla. What were we looking for, guys? If you've listened to me ever since the end of December for a month now, what have I been complaining about? No hourly uptrend by the bulls. Well, now finally, right? Finally, an hourly uptrend. So daily bounce at this point is currently underway. Daily downtrend more than confirmed. Now we have to look for the size of the bounce in relation to 218. If you want to see the bulls get a very healthy bounce, that needs to be them getting at least to about 204. If you can get me up to 204 on this bounce, the bulls are set up nicely to potentially have enough space to recapture the daily uptrend. Now, obviously, your bears are in full control of this on not only the daily, but also the weekly time frame as well. So once we do start pulling up, if we do get this daily uptrend underway right here, right? Well, that will just mean that we're looking for a weekly lower high. And obviously the bears are in full control, right? Beautiful weekly downtrend by the bears at this point. Lower end of your downtrending channel. We were expecting a bounce. Why? Because RSI got down to levels that it hadn't been only twice in the stock's most recent history, which was an RSI of 18. So we were expecting the bounce, but that's all we're really expecting, guys. Still looking out for the lower high. It's all in the size of the bounce. Put in 100% engulfing move on this most recent down leg. Okay, then the bulls are set up really nicely to have enough space to reset the daily uptrend. And then we can really look at how much of this weekly move we capture. But step number one is measuring the size of this daily bounce. If we roll over the hourly time frames, let's say tomorrow, well, then the bounce size will be so weak that we're just expecting lower high to lower low continuation, guys. Lower low area of confluence, we're right there, guys. 180 down to about 165-ish is going to be that area. It's the lower end of your downtrending weekly channel, and it is also previous horizontal support, which we really bottomed out in early 2023. So looking good on Tesla, but this is just one day of bounce. Need to see furtherance, need to see an engulfing move, get me at least up to 204, and then we can talk about the bull's capacity to reset the daily uptrend. Now moving on to Palantir. Palantir as well, 4.5% to the upside, so really putting a stop to the bleeding. Palantir was in jeopardy of losing the daily uptrend, had to protect these lows, 1609. But now the bears have pulled back so much, we could just be expecting a potentially tightening range leading into earnings, which is coming up pretty much next Monday. So not a lot of time before earnings. We'll see what Palantir can do, but I would be very surprised, guys, if we get a break of this range either way. 16, obviously, if big tech falls off a cliff and Jerome Powell is hawkish, Palantir is going to get caught up in that as well. But let's say everything is good in the markets this week, and we really don't have any outlier, any edge cases in terms of things really coming undone. Well, I can expect to see a tightening range on Palantir. That's just because the bears have taken back so much of this move by the bulls. Usually you end up with a tightening range of accumulation. Very tough for the bulls to V-shape a move like this. It can always be done, but it's just the improbable scenario at this point. So at this point, I am looking for a lower high, probably in the higher end of this range right here. 1750, which is the bottom end. This used to be acting as support, should be now acting as resistance. So we're going to keep an eye right where this line is right there. May just get rejected from here and have to tighten up a little bit into earnings, but everything looking good, saving the daily uptrend right now. And also, right, trying ever so slightly to put in a weekly tightening range accumulation for a potential breakout to the upside. Earnings is going to be crucial, in my opinion. If they can report positive EPS, once again, positive net income and increasing customer base, you may just see Palantir recapture this daily uptrend fully and really get some legs to this weekly move higher as well. So Palantir looking decent, but if ever it falls apart, right? 1550 down to 14 is our massive area of support where I will be writing a bit more options, but looking decent on Palantir, just sideways consolidation at this point. Now moving on to PayPal. PayPal with a beautiful day. PayPal has been so I think this has been the most volatile 2 weeks in PayPal in pretty much the last couple of years at this point, right, guys? So very, very healthy moves up, healthy retracements as well, really getting that volatility in before earnings. Earnings next Wednesday, not this Wednesday, next Wednesday. So we'll see how PayPal performs there, but looking good. What we're looking for here, guys, daily uptrend was confirmed. Break to the upside, looking for the daily higher low, and now looking for potential trend continuation. The one thing I didn't like is how much of this upside move the bears took back. So you can see the bears took back up to a maximum of 80% of the move, which could lead us into a tightening range leading into earnings. When the bears take back so much of a move, it's so tough for PayPal to V-shape this. When there's a lot of volatility, that increases the probabilities, but more cases than none, you get a move up, move down, consolidation sideways, move up, so you take back too much of the move, consolidation, move up, take back a lot of the move, consolidation sideways, right? So PayPal has done this a lot of times in the past. Wouldn't be surprised if it does the same thing leading up into earnings right here. We're playing with a crucial spot right now here, guys. This $64, $65 range is so crucial. It's the top end of our downtrending channel that we've been pretty much stuck in for the past 2 years at this point, right? So we need to get a close above on the weekly for that. We'll see if this week can do it. Obviously heavily dependent on the rest of big tech and on Jerome Powell's comments on interest rates, since this is interest rate sensitive. Wednesday should be a very big day, top positive or negative for PayPal. But one thing's for sure, they haven't lost the structure, still looking for either the tightening of this range or at best case scenario, a V-shaped recovery back to 52-week highs right here, 68.24, which would really put us in line for weekly trend expansion beyond our downtrending channel right here. So everything looking good for PayPal, but I'd be hard pressed to really get a decent breakout above these areas much before earnings. Earnings going to be a very big catalyst. And obviously earnings, if we go to the downside here, guys, target this area, pretty much $60 all the way down to 57 is the must hold area for, pre and post earnings, in my opinion. So that's everything I had for you guys in terms of stocks. Now let's take a quick look at my portfolio. So taking a look at the portfolio here, guys, so you'll see that our year-to-date performance is now almost positive, down to about only 0.11%, even though the S&P 500 and QQQs have been outperforming us. I do think that we can catch up and still outperform them for the year, just as we did last year as well. So after a very rough start to the year, because we're exposed to a lot of interest rate sensitive stocks and a lot of stocks that were sensitive to news coming out of China, that has since dissipated and we are on to a very good recovery. Have been writing a lot of premium over the course of the month. So it was only a matter of time when the underlying positions would recover. We would get a very juicy recovery. We've been writing a lot of premium so far. So just waiting for those assigned positions essentially to recover. All the while we were still writing premium. So that's how the account has kind of been growing twofold over the past month. So as you can see, guys, not much has changed, but a few new positions here on the day. So CSIQ still have those covered calls, $24 calls for about 58 cents. You can see that most of the value of the contract is now pulled out. So our break even on CSIQ currently is still about $25.90. We'll see how it ends over the course of the week, but if it ends over 24, I may just be rolling those calls into next week, continue to profit from the volatility. I've been doing a great job of lowering my average cost. So we'll see what happens with those. PayPal, we still have those 64 calls on for the week. So you'll see that we wrote them last week for 69 cents and they're up to about $1. That's because PayPal has obviously increased since the time where we wrote those $64 calls. If we end above 64 over the course of the week, I will look to roll the premium on PayPal as well. Our break even is $63.90 and I do want to kind of try and ride this one a lot more. I wouldn't be mad of being, holding this stock in the trading account for so long, pretty much. Since last earnings, since August, we've been in this one, guys, right? I wouldn't be mad to be called away so shortly after being in profit, just because in my main long-term account, guys, I do have 500 shares of PayPal with a break even of roughly the same $67, $68, which I will be riding, but we're going to try to milk this position as much as possible, that being said. So we're going to try to roll these into next week potentially as well, because PayPal does have earnings next week, not this week. So should be able to get some juicy premium from those and further reduce our cost basis. Now, we did write the CELH puts. We were talking about these on yesterday's video, top 5 options plays for the week. So CLH, the 0.5% rule opened up for the 48 puts. So CLH, you guys remember, I make this play a lot in this account, right? Anything below 50, we're looking for the $48 puts. Very juicy area of previous support, that $48 level, and we were able to get 0.5% on them today. You'll see that I wrote them for 24 cents one contract. So going to be looking to ride those until expiry, and now we are almost, we're still in profit now by about 10 cents. So coming out of the contract, premium coming out of the contract so far very nicely. We hit those at the low of the day pretty much. Very good. Now, Google wrote the 145 puts. Now, guys, when I run through the strategy, I tell you guys, do not write any puts for earnings, and I still maintain that. The only reason that I'm writing Google before earnings is because it is currently an area that's below the expected move. So the expected move for Google for the week is about 146.43. I wrote the 145s. The 145s are also previous resistance, which should be acting as fairly decent support. And even if we get lower, 140, 138, I'll be doing some there as well. So I can afford to do these, right? But I do not recommend that anybody else does these. So this is a gamble play, guys. It's not a sure thing. Normally we wait until after earnings, but I like the premium on Google that I got for them. I got almost $1 for these contracts. So my true break even will be around 144. We do a very large support here down in lower 141, 138 zone. So I will be looking to play Google. I like this company a lot. The valuation is relatively low on a forward basis, and I think they should be giving fairly decent guidance. So I went with it, but still a risky play nonetheless. If I get assigned at 145, I will not be mad whatsoever. It just may take a little bit of time to get out of those shares. If ever they truly plummet into the 140, 138, I'll be averaging more there. But to get back up here, it may take a couple of weeks. So just keep that in mind. If you're looking to play earnings, I never recommend to play earnings unless you have a really long-term bullish position on the stock and you really don't mind being assigned at that strike price. Those are keys. Now, Starbucks, we have the 96 calls. Starbucks with earnings tomorrow after the close. So we'll see how those goes. I got some decent premium on them for the week, but we wrote the 96 calls. You can see my break even is 95.24 after being in these for almost a month right now. We brought our break even down. If Starbucks goes above those, above the $96 mark, I will be looking to potentially roll those calls into the next week if I can get some premium on them. And obviously, if we open on the lower side of things into the 80s, I may just be averaging in with some more short puts, but happy with the premium that I generated on these $96 calls for the week so far. So Tesla here, guys, the 175 puts. So you can see that we actually wrote the 175 puts for Friday, but this was actually a roll up from the 170s that I had earlier on the day. So I wrote the 170s last Friday. You can see that trade right here. We wrote the 170s on Friday for 84 cents. And this morning, since Tesla had a very good morning, we were able to close those for only 19 cents. So capturing a lot of the profit, and we went up one strike. So I got a little bit greedy with it for the week. We closed them for 19 and we wrote for 42. So I got a net credit here, of roughly an extra 23 cents. Going to just be looking to juice that. So you can just add the 23 cents to the premium that I had on Tesla pretty much over last Friday. So that would be $100 in total by the end of the week playing Tesla at fairly conservative levels. So fairly happy with that trade on Tesla. We're going to ride these pretty much to the end of the week. If I get assigned Tesla at 175, I really don't mind, guys. That's a very good price for long-term Tesla shares for me, or just a little swing trade. Trade Desk, 70 calls still in motion here, guys. So we'll see how Trade Desk performs. They do have earnings, I believe, coming up, not this week, but in a couple weeks. So 2 weeks away still, but looking like it does want to potentially set the daily uptrend at the higher end of this range. So if we do crack above the 72s, I'll be looking to potentially roll from my current 70s, maybe up to 72s for next week, something like that. As long as I can get a credit, our break even is down to 68.71. I'd like to increase our strikes here on the calls just so I can get a little bit more money out of this position after being assigned at the end of December. But all in all, good recovery here on Trade Desk. UPS, we took another earnings trade here. UPS, the 145 puts. Right, 145 puts for about $1.07. UPS has earnings tomorrow before the open. So like I said, guys, never do earnings plays. I'm doing these because I have a lot of experience playing UPS stock. The expected move for UPS is about 148.88, which is about 5.8% to the downside. I went with the 145s, right? So that's about lower, ever so slightly lower than the expected move. And the valuation at UPS down to lower 145s is very juicy. I played this stock earlier this year in the 150 levels. So I always told myself if I can get it back in the mid 140 to lower 140 areas, I would definitely be doing that. Price to earnings ratio currently is only about 16.11 right now. You can see that lower right here. And Q4 is usually the best quarter for most of your logistics and distributors plays. So that's why I took them. So UPS earnings on deck for tomorrow, and the rest is just expired positions over the course of the weekend on Friday. Still have the Amazon swing trade, still have all the rest of the swing trades here, guys. As you can see, Nike is the only one that I haven't been able to write covered calls, but everything else is pretty much accounted for in terms of the portfolio. We're writing covered calls. The only other one that I haven't been able to write covered calls this week is Baba, but Baba we had a very good performance on last week. So that's pretty much everything that I had for you guys in terms of the portfolio update. We're going to be still looking for plays over the course of the week as we rotate in and out of potential further earnings plays, but I'll be very conservative with the earnings plays that I'm going to be playing only on very solid companies, and obviously all of them lower than our expected moves on most of them. So we're going to be looking for premium for the rest of the week. That's pretty much everything I had for you guys today. Going to be looking to have a juicy week in my account here, so cross your fingers for me. I think that we should be able to do some pretty good things. So as always, guys, if you learned anything or liked the video, consider dropping a like, would really appreciate it. And also, if you're new here, consider subscribing. We always do these recap videos Monday to Friday after the close, and then we do some educational videos and some trade topics over the course of the weekend. And as always, if you have any questions, guys, technical analysis, macro, stocks, options plays, whatever you want, leave it down below in the comments, and I would say what I would do in my own portfolio. So take care, guys. See you tomorrow after the close. Huge earnings day tomorrow, guys. So if you are playing earnings, be careful. Please be careful. Don't ever forget that we are in the business of risk management, not profit optimization. I know a lot of people sometimes feel it's the other way around, but just keep that in mind. In terms of finance, the world of finance, we are in the business of risk management, not profit optimization. If you manage your risk correctly, the profit optimization should come as a byproduct. So just always remember that. Keep that front and center. Take care, guys. See you tomorrow. Peace.